Good morning, traders. Welcome to the daily wave count update. It's Friday, and the markets have been extremely bearish, almost everything, over the last 24 hours. We were seeing the Bitcoin selling off with a huge candle because Tesla dropped their Bitcoins, and of course, a lot of things are happening in these markets. So today we're going to check something important related about the market structure, which is an important part of the process when we are finding the end of any wave. So one of the key things of the market structure is that we have a low, a retrace, a lower low, another retrace, a lower low, and this sequence can extend. Sometimes it's with one rejection, the price turns around. Some other times, like the cycles we have been seeing this week and the last week, they continue extending and they continue selling off. So we have two options. We can either sell the highs if there are good zigzags. So remember that a zigzag is a three-wave sequence, and when the price rejects, we can sell it. Or we can buy the rejections, especially those who are near the previous low. So, for example, this one is too far, this one could be interesting, and we can repeat that process. So we can trade inside the channel below or above, and will be the same at the end. So the channel could be, let's say that the price is trending here, it's trending, and we can draw the channel. Roughly, doesn't matter, you don't have to be precise. It's just an area, and your plan is either selling here, or buying here, or selling here, or buying here, or selling here, or buying here, or selling here, or buying here, right? Those are your permitted trades during the process. If you are thinking that, let's say this is a second wave, or a wave 4, or any corrective, and you're expecting a trend reversal to the previous high, whatever, you can go with the buy trades. If you are thinking that the price is going to continue to the other side, you're gonna trade on the other end of the trend, right? And of course, you can book profits at the previous low or at the rejection, whatever, right? But you're gonna be an active trader. So that's like the main logic of the market. The next important concept about this market structure is when is going to be confirmed, when it's actually going to turn around. Because if we buy here, we know that the price can continue lower, right? If we buy here, as we were talking about yesterday on the euro, we know that the price can make a lower low. So the next question in this process is how we can know that actually the market is turning around. That's the next part. Of course, we can trade the rejections, or we can sell the highs, whatever, but when the price, traders, and I believe this is one of the most critical parts of price action analysis, when the price crosses these last retrace, and have a look at how important it is to understand which retrace is the one that I'm referring to. So you have to look for the low, the last low, look to the left, find the previous low, and is the peak in the middle of the last two lows. All right? In this example, you have this low, you have this low, and where is the peak between the two lows? This one here, right? Let's do it again. We have this low, we have this low, so it's the peak between the two lows, right? That's this critical area. So when we are in that trend, if the price moves up and breaks up or just hits whatever the previous, that critical peak that I'm referring to. That's what we call a change of behavior. So that's the real validation, the real first big validation. Yes, the price can continue lower. So you are not going to buy here. Remember that this is a selling area, so you are not going to buy it. You are not going to sell it either, because for the first time, you are seeing the change of behavior. So the price is in a selling area. However, you are not going to sell it because it's changing the behavior. Make sense? The next step is the test. So if we have a successful test, this time as a zigzag that is unable to reach the low and rejects, that's your first trend trade, and that's the final validation that the market is turning around. It's smiling, is turning around. That's the process. So without breaking this key resistance area, this critical area, we can, if we like, we can buy the lows, but we need to understand that the price can continue if it's extending the move. Right? So let's have a look at the process. So for example, in this euro, we can buy it here. We can buy it here when the price rejects, as we were talking about this setup yesterday, but we know that the validation will happen if the price crosses this area and if it builds a nice impulse, right? So let's suppose that we have 1, 2, 3, 4, 5. Right there is where we can tell that the market has turned, that the market has been now with a high probability building the reversal for the end of the wave 4. Okay, but if this is not happening, here you are going to reach your 1-to-1. So let's say that you went long here and you leave a protective stop loss here. So this is your risk. And let's suppose that at the 1-to-1 you book partial profits, and then you let it run a little bit more and you have a 1-to-2. So the 1-to-2 you book extra profits. But look, when the price fails and moves under this zigzag area, that's the trade for the sellers. So if you are long from here, you have to take out your trade. You have to close your trade, because this is the signal for sellers. So the sellers should be selling here. And the target of the seller is the previous low. Right? So this is the buy trade. This is the sell trade. Let's have a look at the other ones that we have been highlighting this week. So this week, when we started the week, we started to see that this was a sell trade. The minimum target was here. Okay, so good for the sellers, right? Here could be a buy trade. So here is a trade for the buyers. So this could be useful for people buying or for people closing their positions. This rejection, right? So this could be a setup. This one here as well. So we have one setup and a second setup. Let's say that this one went to the stop loss of the buyer. The second one that was here did a nice leg up enough to give some profits to the buyer. Yeah, didn't change the behavior because the change of behavior point is here, right? The price moves down. So in this case, the sell for the seller is here, which I believe that is not a good trade, but that's the signal. Why I believe is not a good trade? Because the distance between the high and the entry point is huge, but that's the signal. So of course we can then add that it was too big, the distance between the entry point and the stop loss, and we can add other things, but technically with this system, that's the signal. The next trade, where is the next trade? Right here. The price moves under the low and rejects. When we are here, we look to the left, and this is the critical area for the trend reversal. Okay, price moves up. We have a three-wave sequence again, and here when the price sell-offs, this is the sell signal for the seller, and this is the signal for the buyer to close the trade. If the buyer is too greedy, we'll have the trade out here at the break-even. Let's continue with the process. Now we have a fresh low. So we draw the line here, and we have a fresh low. Where is the new critical reversal point? Right here. Right? So here was the first one. Look how they are lower, lower, lower. Right? So it's the trend remains active, the bearish trend. Where is the next buy trade of the buyer? Well, right here. Right? Some points above the previous low. So to be more precise, the low was at the 108.55. So we can say, let's say 5 points at the 60, Could be 5 or 4 points. A little bit of distance. That will be a buy stop order. So that's for the buyer. The seller is not going to act here. Right? The seller is not going to sell here. The seller was here. Right? That's the point. You are not going to sell cheap. So this is the setup for the buyer. Right? Let's suppose that during the session, the price keeps selling off. And later during the session, we have a new pivot here. The price jumps, moves down, and rejects. So this is the new buy stop area for that buyer. So that buyer will update his entry point to this area. If here we have a good zigzag, could be a sell trade for the seller, right? And that's the process, traders. That's the process. We know that the wave 4 is over when we have the 5-wave sequence up. So you can see the difference. We are not forecasting where the wave 4 is going to be over, because as you can see, that's impossible. Nobody in this world can tell where this leg is going to be over. That's impossible. But even not knowing where the wave is going to be over, we can trade if we use the extremes of the market. So the trader who has a bearish bias is going to sell at the highs. The trader that is having a bullish bias, as is my case, the trades are at the other side. So these lows are for buying, these highs are for selling, because the structure of the market is telling so. We have each retrace lower than the previous one. When that changes, if this thing turns and the price starts moving on the opposite behavior, we are going to change the bias and we're going to start buying the lows. That will be the transition of the trend. Of course, you have to be careful, because some traders get overexcited with the change of behavior. Some of them buy here, which is completely wrong, and leave a stop loss whatever below the low is. And that's a huge mistake, because the change of behavior is going to be a two-step process. Change of behavior plus a test. The test is a three-wave sequence, a zigzag, that fails to reach a lower low and rejects, and right here you can start buying. That's the market structure process, traders. This is the market structure process. So here is where you can buy it, and your protective stop loss is going to be under the low, and this is going to be your entry point. And the change of behavior is just a heads up It's not a trade, but the test is a trade. Because sometimes you are going to have the change of behavior and the price is going to drop fast and it's going to create a lower low. So you can't anticipate if the test is going to be successful or not. That's why you have to wait to see it. If the price reaches the low, you are going to reactivate the bearish strategy, selling zigzags. This could be a 1 minute chart, or this could be a daily chart, or it could be any time frame. Practice this concept. Draw in your chart, pick any chart, your favorite instrument. Could be a stock, could be an index, could be any future, could be a currency, could be anything. It's going to work exactly the same. Pick your favorite and make this same exercise that I'm doing here. And if you have some extra time, go to the forum and publish your results. Like publish your chart with this exercise so you can share it with the community. And some comments, some appreciations that you have around the concept. So I believe this exercise, you can post it here, of course, in the membership forum. So members forum, and then it could be under the Elliott Wave Analysis talk or strategy and trading talk, probably, whatever you prefer. Just post it there, and we will start the debate there. We'll start the discussion there. So that would be interesting. So, for example, there the euro is already in the trade, right? When we were talking, the euro is already in the trade, right? That's the setup of the buyer. And you may wonder, okay, but you're expecting a deeper wave. Okay, that's what I'm expecting, but it's not what is happening. You see the difference? You can expect so many things, but things are not going to happen as you may like, or as you may imagine, or as you may expect. Same as in life, right? You can have so many plans for your future, but not everything is gonna happen as you were planning. There are going to be some turnarounds during the process. So that's the process. Let's see if that's gonna complete the pattern here, or if we're going to have a fresh low. We will see, but from the technical point of view of the entry, this is an entry point for the buyer, right? Let's have a look at the pound. The pound also is moving down, not as fast as the euro. The pound couldn't make a lower low, which is good, because everything is bearish, but not the pound. The pound is not below the lows, and we already have this rejection. So this was the last trade for the buyer, right? So the buyer now needs to be extra careful, because if he went long here and have a protective stop loss here, he already reached 1-to-1. So he has a safe trade. Here, when he's seeing these rejection signals, the buyer can book some extra profits. So he was trading with 20 contracts, and the 1-to-1 he closed 10 contracts, then he can close 5 more, let's say, to be cautious, because everything else is dropping. So the question is why the pound is not moving down, right? So of course it's something to be careful. Look at this rejection. This is another trade for the buyer. So the buyer here can load up his position. And this could be the end of 2, because we're seeing the rejection. Why not? This could be the end of the second wave. That's a zigzag that is being rejected. We have the change of behavior. Look at this low. Have a look at this low. And here we have a change of behavior. A bigger change of behavior is here. Let's see if it's going to happen. So just start putting all together. Price action, cycle, and of course the whole institutional analysis. Here is the Aussie. The Aussie is interesting for the upcoming week, I would like to go. I would like to be the buyer. So the price, let's say, drops here. So 1, 2, 3, 4, 5, and at the rejection, I would like to buy it. Seems that we are going to have some bounces the upcoming week. Dollar yen also is building the first leg down for his corrective wave. So it's going to complete the 5-wave sequence. Here is where the dollar yen is going to change its behavior. If we compare this pivot high with this pivot high, where is the lowest part of the cycle between the two highs? Here, right? So that's the point where the price will change its behavior. Let's have a look to the dollar CAD. So on the dollar CAD, we are seeing that the price is moving up as well. So another run up is extremely expensive. So we are getting closer to the corrective leg. On the dollar Swiss, we are seeing the same behavior. This was the plan for this part of the week, having a hard high. So we are getting closer. The New Zealand dollar, the Kiwi. Wow, this is a nice rejection, right? Look at this thing. A 3-wave sequence. The price moves below one time here, rejects, so that could be an entry point. This could be a loss. This could be a second entry point. 1 and 2. So that one looks interesting as well. The euro pound. Look at the euro pound. So when you learn the trend analysis, that is something simple, but it requires some time. Probably you can spend 1 hour a day for 1 week or 2 weeks, if possible, just doing this exercise of analyzing the trend, and that's gonna give you that's gonna give you an additional edge, and that's gonna install in your mind the trend analysis, the structural analysis. So instead of saying, oh, I think this is the end of the wave 1, or here is the end of this wave, nope, just build your trend analysis. So what is the behavior that you are seeing here? So you have this high. Well, let's start from before, let's make the complete exercise from here. We have this retrace, and we have this higher retrace. What should be the next retrace doing? Well, being higher to continue with the sequence. But what happened here? It changes. See, it changes because now it's dropping below the previous retrace. And there is a zigzag. So what is this? A sell trade. There are going to be different zigzags, some bigger, others smaller. That's why I'm against the application of Fibonacci levels, because a wave 2 can be just 30% or 20% or 10% of wave 1, or it can be 50 or it can be 80% or any level. It's random. So Fibonacci levels are just going to consume your energy. But instead of doing that, you can look for the ABCs. And no matter if it's tiny or big the pattern, or bigger the pattern, you are going to have your zigzag, right? Okay, so let's continue with trend analysis. Next step. So we have on the other side this high, the high, this high, this high, this high, right? Those are the highs. Also, we have this high. We have this high. Right? If you like, you can also include the internal ones. That's fine. On the other side, you have this low, 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 this low. Okay? So with this structure, the only thing you can be doing is selling or buying if you have a rejection near two lows. For example, here is a buy trade, or here is a buy trade, Here is not a buy trade, right? Never rejected and accelerates. So we don't have any buy trade. Probably here. No, because we don't have any too lows, right? And this one will be the next buy trade. So this is the exercise that I want you to do on your own. Pick your favorite if you have time, share it on the forum, and start practicing this type of behavior. So here, lower, 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 and this one, oops, there is a change of behavior here. Right? So here you have to be careful because you have the change of behavior. Right? So probably this is not a good sell trade because we have that change of behavior. Of course, in this case, I'm looking for a fresh low because that's the wave count. Right? So in this case, I'm looking for a fresh low. So here the test is likely to fail. So you are not going to buy it. Fresh low, and here will be the next buy trade. And this point here will become the change of behavior. That's the process, traders. You see, it's so simple. And it's so objective to avoid imagine things or trying to guess or trying to find where to find the trade, right? The Eurogen, looking for a fresh high. Anyway, over the weekend, I'm going to clean up a little bit the wave counts as usual. So here we have, traders, the Bitcoin. The Bitcoin just today suffered a lot. Tesla was holding a lot of Bitcoins, like a lot of millions of dollars in Bitcoin, and they dropped everything in one trade. So it was a huge sell in one trade. You know, it's interesting that they don't try to do the institutional process of slowly selling their assets. They, with one click, they sell everything. That's interesting, right? Why they don't try to hide over time, selling slowly? They will make more money. Of course, their execution should be terrible because look how the price moved down. You know, if you place a huge order and you cause that the market drops, your execution is terrible, and in millions of dollars the loss is huge. But if you slowly, as the institutions make all the time, if you slowly start selling the highs, but not your whole position. Let's say if you have $130 million to sell, something like that was the amount that they were selling. Here you can sell 10 million. Wait, right? Wait. Here, sell another 10 million. Wait, right? And if the price comes here and people think is cheap, people will buy them, and you wait. And when the price comes up here again, you sell another 10 million. And slowly you start closing your position. But of course, if you hit everything on the same trade or at the same time, you're going to cause this. And at the end, you're going to be selling the majority of your position here, and your average price will be terrible because you feel everything that was available in the market. So this is and they did the same with Tesla when they wanted to buy Twitter and they need the money from Tesla, they sell stocks all at once. So of course it's a really weird strategy. Anyway, but the problem that I see now on Bitcoin is that if a huge company like Tesla, they were selling their Bitcoins because they don't see any future on this currency, imagine the others, right? So this could start something really bad on this currency. Anyway, it's extremely expensive. So for now, I'm going to be conservative. Let me show you what I did on the weekly chart. So I did, it's similar to the previous wave count, but I did this leg as a wave 1 and this as a wave 2. Of course, this can retrace a lot without getting invalidated. It can retrace up to this area, 15,000. But we will see, if the price keeps selling off strongly with big red candles, we don't need to wait for the invalidation to know that it's going to happen. All right? So if we start seeing next week another big candle, we're going to cross this area. And if the price moves under this low, under the 15,000 area, and fails to reject and accelerates even more, probably that's it. Probably that's the end of this Bitcoin. If the price comes out here, which would be fantastic, and returns and starts building accumulation at the low, wow, that would be the best price. Of course, it's different buying here cheap than buying here expensive, right? Of course, it's completely different, the process. So that's update, let's see. But of course, really bad news for the Bitcoin. And not only the Bitcoin, the whole crypto market is suffering a lot from this decision from Tesla, because they are saying, nope, we're going back to US dollars. This is crazy. That's actually their opinion, right? So, of course, the Ethereum was suffering a lot as well. And almost all the cryptos were following that behavior. So of course, it's something to be extra careful. All right, traders, what a week in these markets. Please have a fantastic weekend, and I'll see you Monday. Take care. Bye-bye.